Hi, I'm Vanessa from Premier Tax Solutions, and a question that we get asked all the time is, should you buy or lease a company electric car? So you've picked out the new electric car that you want, but should you buy it or should you lease it? From an accountancy perspective, the main difference between buying and leasing a car is that when you buy a car, it's an asset and it's eligible for capital allowances, but then when you lease a car, the payments get offset in the P&L every month as they arise. A hot topic in the world of company cars is electric ones, as they can be a tax efficient way of doing things. But just because something's tax efficient, it doesn't mean it's the right way of doing things. You should make sure that your company can easily afford the lease payments of a company car, and that it won't affect the cash flow and the profits of the business. The benefit in kind on fully electric vehicles was reduced in April 2020 to 0% from 16%. It currently sits at 2%, making it an attractive option as a company car. If you purchase a new and unused fully electric car through the business, you can claim 100% first year allowance against your corporation tax bill. This is only available if the vehicle is purchased outright or via finance. It's not available on lease cars. The first year allowance means you can deduct 100% of the cost of the car against your corporation tax. A key point to note when you're using the first year allowance, the company will pay corporation tax on any proceeds of the sale of the car. If a vehicle is leased by a company, then the monthly amounts get offset in the profit and loss account. So the monthly lease payments will reduce profits and corporation tax. A car on finance can have its interest payments deducted as part of the profit and loss. In terms of VAT implications, if the car is leased, then you can claim 50% of the monthly VAT payments back. If the car is purchased, then VAT is only reclaimable if it's used for business use only, and commuting to and from work isn't business use. Also, just to note, this applies to company cars, so if you're trading through a limited company, not as a sole trader or a partnership. So, to recap, if you buy a car, you can claim 100% first year allowance on any new and unused fully electric vehicles, but you'll pay corporation tax on any sale proceeds when you come to sell it. And if you buy it on finance, then you can offset the interest that you pay as an expense. If you lease a car, the monthly lease amounts are put into the P&L as an expense, and you can claim 50% of the VAT back off the lease payments. What I've covered in the video looks at fully electric vehicles. If you're looking at hybrids, then they're quite complex, so you'd need to get in touch for up-to-date advice on that. If you've got any questions, don't hesitate to get in touch. Thanks for watching.